Gold, daily forecast, May 23rd, FXEmpire.com. The gold markets, as you can see, rose during the session initially on Wednesday, but above the 1400 level, ran into all kinds of trouble and fell, forming a shooting star, actually, which of course is a continuative candlestick pattern. We don't necessarily want to short, though, because we see that we're right at support. This may be more of a reaction, not necessarily to the 1400 level, but more of a reaction to Ben Bernanke and his testimony to Congress. And in fact, it's directly correlated if you look at the shorter time charts. He suggested that perhaps the Federal Reserve could taper off on its quantitative easing, and as a result, the U.S. dollar gained strength. Treasury notes gained 15 points in a very short amount of time in the 10-year, and as a result, money flew into the U.S. dollar. This, of course, has a negative correlation to gold, as gold is priced in dollars, so it put pressure on precious metals in general. This is probably the one thing that really could break down the gold markets is if the dollar starts taking off. Of course, it also depends on why. Right now, though, we're not ready to start selling. There's just simply too much support just below. It should also be stated that he also suggested that the quantitative easing could be expanded if it was needed based upon economic numbers. So it appears that for the first time he suggested that tapering off could happen relatively soon, and the market got spooked. A break above the top of the shooting star is a very strong buy signal, and that's actually what we would wait for. As far as selling, we're going to be a little bit leery to do so, at least until we clear the 1350 level. It'll be worth watching over the next couple of days, but it's very unlikely at this point that we will be selling anytime soon because we feel that the market may have had just a bit of a overreaction to essentially what was a neutral comment.